Question 1. Title insurance coverage. Which of the following accurately distinguishes the coverage provided by an extended title insurance policy compared to a standard title insurance policy? A. An extended policy covers only defects revealed by public records, while a standard policy covers all defects regardless of recordation status. B. An extended policy includes coverage for risks such as zoning violations and building permit issues, while a standard policy does not. C. A standard policy provides coverage against losses from fraud and forgery, whereas an extended policy excludes these risks. D. An extended policy offers protection for certain off-record risks like encroachments, while a standard policy typically does not. Answer: D. An extended policy offers protection for certain off-record risks like encroachments, while a standard policy typically does not. Explanation: extended title insurance policies provide broader coverage compared to standard policies. Specifically, extended policies include protection against risks that may not be discovered through a title search but could affect the property, such as encroachments or certain unrecorded liens. Standard policies generally provide coverage based on matters recorded in public records and do not cover off-record risks. This distinction is crucial for understanding the breadth of protection each policy type offers in real estate transactions. Question 2. Title searches and examinations. During a title search, what is the primary purpose of reviewing the chain of title? A. To verify the accuracy of the legal description of the property. B. To confirm that the property is free from any existing liens or encumbrances. C. To establish the historical ownership of the property and identify any potential gaps or issues. D. To determine the current market value of the property. Answer: C. To establish the historical ownership of the property and identify any potential gaps or issues. Explanation: the chain of title is a chronological list of all previous owners of a property. Reviewing the chain of title is essential to establish a clear history of ownership and to identify any potential issues such as breaks in the chain, which could indicate unresolved claims or disputes. This process helps ensure that the current owner has a valid and undisputed ownership rights before closing a transaction. It is a fundamental part of title examination to ensure that no issues will affect the buyer's future ownership. Question 3. Scenario-based question. Mr. Thompson is purchasing a property and has received a title commitment. The commitment lists several exceptions in Schedule B, including an easement for a utility company and a right-of-way for a neighbor's driveway. Mr. Thompson is concerned about these exceptions. What should Mr. Thompson do to address his concerns? They accept the title commitment as is because exceptions listed in Schedule B are standard and do not require further action. B. Request the title insurer to remove the exceptions from Schedule B before proceeding with the purchase. C. Consult with a real estate attorney to understand the implications of the exceptions and how they may affect his property rights. D. Negotiate with the seller to modify the exceptions listed in Schedule B to eliminate any potential issues. Answer: C. Consult with a real estate attorney to understand the implications of the exceptions and how they may affect his property rights. Explanation: exceptions listed in Schedule B of a title commitment include issues like easements and rights of way that can affect the use and value of the property. It is essential for Mr. Thompson to consult with a real estate attorney to fully understand the implications of these exceptions. The attorney can provide legal advice on how these exceptions may impact property use and ensure that Mr. Thompson is informed of any potential restrictions or obligations. Simply accepting the commitment or negotiating changes without understanding the legal implications could lead to issues post-purchase. Question 4. Real property law. Which of the following statements best describes the difference between a fee simple and a joint tenancy in terms of property ownership? A. Fee simple ownership grants absolute ownership with no limitations, while joint tenancy involves shared ownership with the right of survivorship. B. Fee simple ownership allows for transfer of interest through will or inheritance, whereas joint tenancy cannot be transferred and ends with the death of a tenant. C. Joint tenancy provides exclusive rights to the property without the ability to transfer ownership, while fee simple allows for undivided ownership with the right to transfer interest. D. Fee simple ownership includes shared rights to property, while joint tenancy only grants partial rights without transfer options. Answer: A. Fee simple ownership grants absolute ownership with no limitations, while joint tenancy involves shared ownership with the right of survivorship. Explanation: Fee simple is the most complete form of property ownership, providing the owner with unrestricted rights to use, transfer, and bequeath the property. Joint tenancy, on the other hand, involves shared ownership among two or more parties, with a key feature being the right of survivorship. This means that if one joint tenant dies, their share automatically passes to the surviving joint tenants, not through the deceased's estate. This distinction is crucial in understanding different property rights and their implications in real estate transactions. Question 5. Title insurance policies. What is a typical reason for a title insurance policy to include an endorsement? A. To extend the coverage to include additional risks not covered by the standard policy. B. To restrict the coverage to specific types of title defects only. C. To reduce the coverage amount to align with the market value of the property. D. To exclude coverage for previously known title defects that have been resolved. Answer 8. To extend the coverage to include additional risks not covered by the standard policy. Explanation. Endorsements are used to modify or extend the coverage provided by a standard title insurance policy. They can add protection for specific risks that are not included in the standard policy, such as coverage for zoning violations or issues related to improvements on the property. This customization ensures that the policy meets the unique needs of the insured party, offering enhanced protection against potential title defects or issues. Question 6. Title insurance regulations and compliance. Under the Real Estate Settlement Procedures Act, RISPAU, which of the following is a key requirement for title insurance companies during the settlement process? A. Title insurance companies must provide a detailed settlement statement that outlines all costs and fees associated with the transaction. B. Title insurance companies are required to offer discounts on premiums for multiple properties insured under the same policy. C. Title insurance companies must guarantee that all title issues will be resolved before closing. D. Title insurance companies should obtain written consent from the buyer before sharing any information with third parties. Answer A. Title insurance companies must provide a detailed settlement statement that outlines all costs and fees associated with the transaction. Explanation. RE SPA mandates that title insurance companies provide a detailed settlement statement, often referred to as the closing disclosure, which outlines all costs and fees related to the transaction. This requirement ensures transparency and helps consumers understand the financial aspects of the settlement, including title insurance, premiums, escrow fees, and other closing costs. RISPA's goal is to protect consumers by providing clear and comprehensive information about the financial terms of their real estate transactions. Question 7. Title searches and examinations. What is the primary purpose of preparing an abstract of title in a title search? A. To summarize the property's physical condition and any necessary repairs. B. To provide a detailed summary of the property's ownership history and any recorded title defects. C. To evaluate the current market value of the property based on recent sales data. D. To assess the environmental impact of the property and any related issues. Answer. B. To provide a detailed summary of the property's ownership history and any recorded title defects. Explanation. An abstract of title is a comprehensive summary of the property's ownership history, including all recorded title defects, encumbrances, and liens. It is a critical component of the title search process, as it helps the title examiner and the parties involved understand the legal status of the property and identify any potential issues that could affect the transfer of ownership. This summary facilitates informed decision-making and helps ensure that the property is conveyed with clear title. Question 8. Title insurance underwriting. Which of the following factors is most likely to influence the underwriting decision for a commercial property title insurance policy? A. The aesthetic appeal of the property and its surrounding area. B. The presence of any existing zoning or land use restrictions that could impact the property's intended use. C. The historical significance of the property and its architectural style. D. The personal financial history of the property owner. Answer. B. The presence of any existing zoning or land use restrictions that could impact the property's intended use. Explanation. When underwriting a title insurance policy for a commercial property, underwriters focus on factors that could impact the property's use and value. Zoning and land use restrictions are critical because they can affect what activities are permissible on the property and whether any potential issues could arise from these restrictions. The underwriter evaluates these factors to assess potential risks and ensure that the policy appropriately covers any limitations imposed by local regulations. Question 9. Ethics and professional responsibility. Which of the following best represents an ethical concern for title insurance professionals when handling sensitive client information? A. Sharing client information with other professionals involved in the transaction to ensure seamless communication. B. Using client information for marketing purposes with the client's consent. C. Protecting client information from unauthorized access and ensuring confidentiality throughout the transaction. D. Requesting client information from third parties without obtaining client authorization. Answer: C. Protecting client information from unauthorized access and ensuring confidentiality throughout the transaction. Explanation: Title insurance professionals have an ethical obligation to protect client information and maintain confidentiality. Unauthorized access or disclosure of sensitive client information can lead to legal and ethical issues, compromising the trust placed in the professional. Ensuring that client information is handled securely and only shared with authorized parties helps uphold ethical standards and legal requirements, safeguarding client privacy and maintaining professional integrity. Question 10. Closing and settlement procedures. What is the significance of a closing protection letter (CPL) in the title insurance closing process? Options: A. It guarantees that the title insurer will cover all potential title defects discovered after closing. B. It provides a formal assurance that the title agent will act in accordance with the terms of the closing instructions and protect against potential errors or fraud. C. It serves as a record of the transaction and provides a summary of all financial aspects of the closing. D. It offers a warranty on the accuracy of the property's physical condition and structural integrity. Answer: B. It provides a formal assurance that the title agent will act in accordance with the terms of the closing instructions and protect against potential errors or fraud. Explanation: A closing protection letter (CPL) is issued by the title insurer to protect the parties involved in a real estate transaction from potential errors, fraud, or misconduct by the title agent handling the closing. It ensures that the title agent adheres to the closing instructions and provides coverage if the agent fails to meet their obligations or commits fraud. The CPL is a critical safeguard in the closing process, ensuring that the transaction is conducted in compliance with established protocols and protecting the interests of the parties involved. Question 11. Title insurance regulations and compliance. Which of the following best describes the impact of the Dodd-Frank Act on title insurance practices? A. The Dodd-Frank Act mandates that title insurance companies provide mandatory discounts on premiums for all policies issued. B. The Dodd-Frank Act requires title insurance companies to implement stricter consumer protection measures and enhance transparency in financial transactions. C. The Dodd-Frank Act primarily addresses the regulation of title insurance agents' licensing requirements. D. The Dodd-Frank Act eliminates the requirement for title insurance companies to disclose settlement charges to consumers. Answer: B. The Dodd-Frank Act requires title insurance companies to implement stricter consumer protection measures and enhance transparency in financial transactions. Explanation: The Dodd-Frank Wall Street Reform and Consumer Protection Act, enacted in response to the 2008 financial crisis, includes provisions that impact various aspects of the financial industry, including title insurance. It mandates enhanced consumer protection and transparency, particularly through the Consumer Financial Protection Bureau (CFPB), which oversees practices related to financial transactions and disclosures. The Act aims to improve transparency and ensure that consumers are adequately informed about the costs and risks associated with real estate transactions. Question 12. Title searches and examinations. Which of the following issues would most likely be discovered during a title search and affect the marketability of a property? A. A minor discrepancy in the property's physical boundaries compared to a recent survey. B. A recorded mechanics lien filed by a contractor for unpaid work. C. A recent change in the property's neighborhood zoning regulations. D. The existence of a personal property item on the premises that the seller intends to leave behind. Answer: B. A recorded mechanics lien filed by a contractor for unpaid work. Explanation: A mechanics lien, which is a claim placed on a property by a contractor or supplier for unpaid work or materials, can significantly affect the marketability of a property. This type of lien is a legal encumbrance that can impact the title's clear transfer and must be addressed before or during the closing process. Resolving such liens is critical to ensuring that the property is conveyed with a clear and marketable title. Question 13. Title insurance policies. What is the primary function of Schedule E title insurance commitment? A. To outline the exceptions and exclusions from coverage in the title insurance policy. B. To list the legal description of the property, the names of the parties involved, and the proposed insured amount. C. To provide a detailed summary of the title search process and findings. D. To disclose the estimated closing costs and settlement charges associated with the transaction. Answer: B. To list the legal description of the property, the names of the parties involved, and the proposed insured amount. Explanation: Schedule A title insurance commitment provides essential information about the property and the parties involved in the transaction. This includes the legal description of the property, the names of the proposed insured parties, and the amount of insurance coverage. It serves as the foundational document that sets the parameters for the title policy and is critical for ensuring that all details are accurate before issuing the final policy. Question 14. Title insurance underwriting. When underwriting a residential title insurance policy, what is a primary factor considered in assessing risk? A. The architectural style of the home and its historical significance. B. The current market value of the property based on recent appraisals. C. The existence of any recorded easements or encumbrances that may affect property use. D. The personal financial history of the property owner. Answer: C. The existence of any recorded easements or encumbrances that may affect property use. Explanation: In residential title insurance underwriting, a key factor in assessing risk is the existence of recorded easements or encumbrances that could impact the property's use and value. Easements can grant others certain rights to use the property, and encumbrances such as liens can affect the transfer of a clear title. Underwriters evaluate these factors to determine the appropriate coverage and to ensure that the policy adequately protects against potential issues affecting the property. Question 15. Closing and settlement procedures. Which document is typically used to verify that all financial obligations related to the property have been settled at closing? A. The closing disclosure CD. B. The title commitment. C. The preliminary title report. D. The deed of trust. Answer: A. The closing disclosure CD. Explanation: The closing disclosure CD is a document provided to the buyer and seller at closing that outlines all financial aspects of the transaction, including settlement charges, loan terms, and the distribution of funds. It ensures that all financial obligations have been settled and provides a detailed record of the transaction. The CD is essential for verifying that all costs have been accounted for and paid as agreed upon. Question 16. Real property law. Which of the following best describes an easement by prescription? A. An easement granted by the property owner to another party through a written agreement. B. An easement acquired through continuous and open use of the property by a party over a specified period despite the property owner's lack of formal consent. C. An easement created by a court order to resolve a dispute over property use. D. An easement established through a recorded deed or legal document. Answer: B. An easement acquired through continuous and open use of the property by a party over a specified period despite the property owner's lack of formal consent. Explanation: An easement by prescription is acquired through the continuous, open, and adverse use of a property for a statutory period even without the property owner's formal consent. This type of easement can arise when someone uses a portion of the property in a way that is evident and uninterrupted, leading to legal recognition of the right to use that portion of the property. Question 17. Title insurance claims handling. What is the primary role of the title insurance company when handling a claim related to a boundary dispute? They to offer financial settlement to the claimant without investigating the underlying issue. B. To investigate the claim, assess the validity of the boundary dispute, and provide legal defense if necessary. C. To immediately cancel the policy and refuse coverage for any related disputes. D. To refer the claimant to a mediator for resolution without further involvement from the title insurance company. Answer: B. To investigate the claim, assess the validity of the boundary dispute, and provide legal defense if necessary. Explanation: When handling a claim related to a boundary dispute, the title insurance company's primary role is to investigate the claim thoroughly, assess its validity, and provide legal defense if required. The company is responsible for resolving issues related to title defects, including disputes over property boundaries, and will work to defend the policyholder's interests and resolve the dispute in accordance with the policy terms. Question 18. Title insurance policies. What does a title insurance endorsement typically provide that is not included in the standard policy? A. Basic coverage for title defects such as fraud and forgery. B. Extended coverage for specific risks such as zoning violations or access issues. C. A guarantee that all property defects are covered without any exceptions. D. A reduction in the policy premium based on the property's value. Answer: B. Extended coverage for specific risks such as zoning violations or access issues. Explanation: endorsements are used to extend the coverage of a title insurance policy to include specific risks that are not covered by the standard policy. This can include issues such as zoning violations, access problems, or other particular concerns related to the property. Endorsements allow the policy to be tailored to meet the unique needs of the insured and provide additional protection beyond the standard coverage. Question 19. Ethics and professional responsibility. Which practice is considered unethical for a title insurance professional when dealing with potential conflicts of interest? A. Disclosing all potential conflicts of interest to clients and providing transparent information. B. Accepting referral fees or incentives from third parties involved in the transaction without proper disclosure. C. Ensuring that personal relationships do not influence professional decisions related to the title insurance process. D. Recusing oneself from transactions where a conflict of interest is present to maintain impartiality. Answer: B. Accepting referral fees or incentives from third parties involved in the transaction without proper disclosure. Explanation: accepting referral fees or incentives from third parties involved in the transaction without proper disclosure is considered unethical. This practice can create conflicts of interest and compromise the integrity of the title insurance professional's services. Ethical standards require that all potential conflicts of interest be disclosed to clients, and professionals must avoid any practices that could undermine their impartiality and objectivity. Question 20. Specialized areas in title insurance. In the context of title insurance for new construction, what is a key consideration that differs from insuring existing properties? A. The need to evaluate the historical ownership chain of the property. B. The need to assess the risks related to construction defects and unrecorded liens from contractors. C. The importance of verifying the property's market value based on recent sales. D. The requirement to investigate previous use of the land for environmental hazards. Answer: B. The need to assess the risks related to construction defects and unrecorded liens from contractors. Explanation: title insurance for new construction presents unique considerations compared to insuring existing properties. One key difference is the need to assess risks related to construction defects and unrecorded liens from contractors. Since new construction involves recent work and improvements, there is a risk of defects that may not be immediately apparent, as well as potential liens placed by contractors or suppliers that may not yet be recorded. These risks are critical to address in order to ensure that the title insurance policy provides adequate protection against issues arising from construction-related concerns. Detailed points: construction defects. These can include issues with the buildings, structure, systems, or materials that may affect the property's value or safety. Title insurance for new construction often includes endorsements to cover such risks. Unrecorded liens. Contractors or suppliers may have placed liens for unpaid work or materials that have not yet been recorded in public records. These liens could impact the title until they are resolved or properly recorded. Question 21. Title insurance policies. Which of the following scenarios would most likely require the purchase of an extended coverage title insurance policy instead of a standard coverage policy? A. A property with a recorded deed restriction on future use. B. A property located in a well-established residential neighborhood with no known title issues. C. A property with a recent boundary dispute that has been resolved but is not yet recorded. D. A property where the owner is refinancing an existing mortgage without changes to the property. Answer: C. A property with a recent boundary dispute that has been resolved but is not yet recorded. Explanation: extended coverage title insurance policies offer protection against specific risks not covered by standard policies, such as boundary disputes that have not yet been recorded. If a property has a recent boundary dispute that has been resolved but the resolution is not yet recorded, an extended coverage policy can provide additional protection against potential issues that may arise from such disputes. Standard policies may not cover these risks, making extended coverage necessary for comprehensive protection. Question 22. Title searches and examinations. What is a cloud on title, and how might it affect a real estate transaction? A. A title defect related to an outstanding mortgage balance. B. A legal dispute regarding the property's zoning classification. C. An unresolved claim or issue that creates uncertainty about the ownership of the property. D. A discrepancy in the property's current market value compared to recent appraisals. Answer: C. An unresolved claim or issue that creates uncertainty about the ownership of the property. Explanation: a cloud on title refers to an unresolved claim or issue that creates uncertainty about the ownership of the property. This could include issues like unrecorded deeds, disputed ownership, or errors in public records. Clouds on title can affect the ability to transfer clear ownership and may require legal action to resolve before a property transaction can proceed smoothly. Question 23. Real property law. Which type of property ownership allows for equal and undivided interests with the right of survivorship? A. Tenancy in common. B. Joint tenancy. C. Fee simple absolute. D. Life estate. Answer: B. Joint tenancy. Explanation: joint tenancy allows for equal and undivided interests among owners with the right of survivorship. This means that if one joint tenant dies, their interest automatically passes to the surviving joint tenants rather than being inherited by heirs. This contrasts with tenancy in common, where each owner has a separate and distinct share that does not automatically pass to the surviving co-owners. Question 24. Title insurance underwriting. What is a primary factor in underwriting a commercial property title insurance policy that differs from residential property underwriting? A. The physical condition of the property and its maintenance history. B. The presence of any restrictive covenants or zoning regulations affecting property use. C. The impact of local school district ratings on the property's value. D. The owner's credit history and personal financial background. Answer: B. The presence of any restrictive covenants or zoning regulations affecting property use. Explanation: when underwriting a commercial property title insurance policy, a primary factor is the presence of restrictive covenants or zoning regulations that may affect the property's use. Commercial properties often have more complex use restrictions and zoning requirements compared to residential properties. These factors need careful evaluation to ensure that the title policy covers any potential issues that could impact the property's commercial use and value. Question 25. Closing and settlement procedures. Which document is typically used to provide a detailed breakdown of the buyer's and seller's financial obligations at closing? A. The title commitment. B. The preliminary title report. C. The closing disclosure. D. The settlement statement. Answer: C. The closing disclosure. D. Explanation: the closing disclosure (CD) provides a detailed breakdown of the buyer's and seller's financial obligations at closing, including settlement charges, loan terms, and the distribution of funds. This document ensures transparency and clarity in the financial aspects of the transaction and is required under the Real Estate Settlement Procedures Act (RESPA). Question 26. Title insurance regulations and compliance. How does the Real Estate Settlement Procedures Act (RESPA) impact title insurance practices? i.e., SPA requires title insurance companies to offer mandatory discounts on premiums. i.e., SPA mandates that title insurance companies disclose all affiliated business arrangements to consumers. i.e., SPA eliminates the need for title insurance disclosures during the closing process. i.e., SPA allows title insurance companies to set uniform premiums across all policies. Answer: SPA mandates that title insurance companies disclose all affiliated business arrangements to consumers. Explanation: the Real Estate Settlement Procedures Act (RESPA) requires title insurance companies and other settlement service providers to disclose affiliated business arrangements to consumers. This ensures transparency and prevents conflicts of interest by informing consumers of any relationships that may influence their choice of settlement services. Question 27. Ethics and professional responsibility. What is considered a conflict of interest for a title insurance professional? A. Providing full disclosure of all potential conflicts to clients. B. Accepting compensation from a third party for referring clients without proper disclosure. C. Ensuring that personal biases do not affect professional decisions. D. Refusing to handle transactions where a potential conflict of interest exists. Answer: B. Accepting compensation from a third party for referring clients without proper disclosure. Explanation: accepting compensation from a third party for referring clients without proper disclosure is considered a conflict of interest This practice can undermine the integrity of the title insurance professional services and create potential biases in favor of the third party. Ethical standards require full disclosure of any such arrangements to maintain transparency and impartiality. Question 28. Title insurance for commercial properties. Which of the following is a UE consideration when underwriting title insurance for commercial properties compared to residential properties? A. The presence of historical property deeds and their accuracy. B. The impact of local property taxes on the property's value. C. The existence of complex leasing arrangements and tenant rights. D. The aesthetic appeal of the property's exterior and landscaping. Answer. C. The existence of complex leasing arrangements and tenant rights. Explanation. When underwriting title insurance for commercial properties, the existence of complex leasing arrangements and tenant rights is a unique consideration. Commercial properties often involve intricate lease agreements and various tenant rights that can affect the title and its marketability. Understanding these arrangements is crucial to accurately assessing risks and ensuring comprehensive coverage. Question 29. Title searches and examinations. What is the primary purpose of conducting a title search in a real estate transaction? A. To verify the current market value of the property. B. To identify any potential title defects or issues that could affect ownership. C. To evaluate the property's physical condition and maintenance history. D. To assess the environmental impact of the property's location. Answer. B. To identify any potential title defects or issues that could affect ownership. Explanation. The primary purpose of conducting a title search is to identify any potential title defects or issues that could affect ownership. This includes reviewing public records to ensure that the title is clear of liens, encumbrances, or other issues that might impact the transfer of ownership. A thorough title search is essential for ensuring that the buyer receives a clear and marketable title. Question 30. Specialized areas in title insurance. When insuring a property involved in a foreclosure, what is a key concern that differs from insuring a standard residential property? A. The historical ownership chain and previous title issues. B. The current condition of the property and any ongoing maintenance needs. C. The potential existence of prior claims or liens that may affect the foreclosure process. D. The recent market trends and property value fluctuations. Answer. C. The potential existence of prior claims or liens that may affect the foreclosure process. Explanation. When insuring a property involved in a foreclosure, a key concern is the potential existence of prior claims or liens that may affect the foreclosure process. Foreclosures can be complicated by existing liens or claims that could impact the title or the outcome of the foreclosure. Ensuring that these issues are resolved is crucial for providing clear title coverage and protecting the interests of the new owner.